Hello everyone. So today we're gonna talk about the Elliott wave theory, which is widely used by many traders across the markets. So first of all, I'm gonna go into detail into the theory. Basically, this is gonna be an introduction to the Elliott waves. Okay. So our first lesson is the impulse. Okay, we are gonna talk about the history or the introductions behind the theory, and we're gonna go over some important rules at the end of the lesson. Okay, and of course the lesson 2 we're gonna go into detail about the corrective waves. So introduction. In the 1920s there was an accountant named Ralph Nelson Elliot. He looked over 75 years worth of stock data, which led Elliot to discover that the stock market, which at the time were thought to behave in a somewhat chaotic manner, actually didn't. After his discovery, he published his theory book entitled The Elliott Wave Principle. So, if you want to grab the book, okay, you can find it on the internet, or you can buy it, um, the physical book, okay. But I'm gonna show you the important ones here in this video, okay. So these Elliott waves are very, very necessary. Okay, as a trader, you always gotta have this bag in your backpack. Okay. So Elliott explained that the upward and downward swings in price caused by the collective psychology, and it always showed up in the same repetitive patterns. He called these upward and downward swings waves. He believes that if you can correctly identify the repeating patterns in prices, you can predict where the price will go next. Elliot explained this is what Elliot waves so appealing to traders across all markets, especially in crypto or the stock market or commodities. Okay, this is Elliot waves are widely used. Basically, every chart that has every market that has had a chart, Elliot waves can be used. So Elliott waves gives us a way to identify precise points where price is most likely to reverse. Essentially, Elliott came up with a system that enables traders to catch tops and bottoms. I personally use Elliott waves with Fibonacci extensions and retracements. Uh, they go together very well. I will cover Fibonacci in another video as it's a big topic. Okay, it's my favorite trading tool. Uh, Elliott waves and Fibonacci go together like bread and butter. Honestly, the two just work amazingly. Using them on their own is okay, but together they just form partnership for good trades. I will be covering the Fibonacci retracement tools and extensions in another video. Okay. So impulse waves. The first wave pattern is called the impulse wave. Okay. So one of the three impulse waves are uh, usually the corrective waves. Okay, one of the three impulse waves, 1, 3, or 5, will always be extended wave. Wave 3 is usually the extended one. The second three wave pattern is called the corrective waves. Letters A, B, C are used instead of numbers, as you can see here. Okay, you can see here we have the first impulse wave, the second wave, the third wave. This third wave is very sharp. Okay, the fourth wave, it's a corrective wave, and the final wave is the wave 5, and then we head into correction. Okay, so waves 3 and 5 are made up of smaller 5 impulse patterns. Waves 2 and 4 are made up of smaller 3 wave corrective patterns. Okay, so you can see here these waves are made up of smaller patterns. Okay, we have wait, this one. We have this one. We have the wave 1, which has what, another 5 impulse wave, and then a corrective wave for making a wave 2, and so on and so forth. Okay, so there are 21 types of corrective patterns, but they are just made up of very three simple and easy to understand formation. Okay, um so the three fundamental corrective patterns are the zigzags, flats, and triangles. So Fractals are structures that can be split into parts, which is similar copy of the whole. So the five smaller impulse wave. Uh, so this is all to do with fractals. Okay. So this everything is subdivided into itself. You have the 1 2 3 4 5 ABC, and 1 2 3 4 5 ABC, 1 2 3 4 5, and then 1 2 3 4 5 ABC, 1 2 3, and so on and so forth. Okay, you have the Elliot waves within an Elliot waves within an Elliot waves within an Elliot waves, reoccurring. Okay, depending on obviously the time frame you're looking at. So so it's very interesting. So there are 21 patterns in total. Okay, but you can put these 21 patterns under the three main headers, mainly on these zigzags, flats, and triangles. So but I'll be for the corrective waves, I'll be going on for the next lesson. Okay, for you all. So you can use this either way, where you are where you have your impulse waves up or down. You can use this to help you find short or long targets, buying or selling. It's potentially great. Okay, this is the wave down. Okay, this is part where the market is trending down. But I'm gonna show you the market when it's trending up. Okay, so Mr. Elliot showed that the trending market moves in what he calls a 5 tree wave pattern. The first 5 wave pattern is called impulse waves. The last 3 wave pattern is called the corrected waves. 20 obviously it's 21 in total. Okay, so Elliott waves can work in a market trending upward or downward, as seen below. Okay, you have your downward market here. Okay, we have 5 waves down and a corrective wave. Okay, the this part is where the market is trending up. Okay, 5 waves up, then we have a corrective wave down. Okay, so there are Elliott waves within Elliott wave. As you can see, they are subdivided into more Elliott waves. Okay, you can see here that the first impulse wave has 5 sub waves. Okay, the second wave, which is a corrective wave, has a sub corrective pattern. Okay, so on and so forth until the corrective wave. Okay, so as you can see, there are 5 and 3 are subdivided by more Elliott waves, and this is because they all follow this cycle. So you have the grand super cycle, okay, which when we're looking at Bitcoin, okay, when we're looking as you can see, there's not much if we're using Bitcoin as an indicator, obviously there's not a century price of data. Okay, so we can use this, for example, the let's go on Coinbase. Okay, you can use this for an we can use this for an example. Okay, and we might be forming the first wave. Okay, we might be forming the first wave, second wave, third wave. Maybe we're forming the third wave. Okay, which goes up to all-time highs. Okay, so we can call this a grand super cycle, where within here we can actually still be forming the 1 2, and now we might be forming the wave 3. Okay, which goes higher, and wave 4 back down, and wave 5. Okay, so like that. So your grand super cycle, which is what we showed, multi-century super cycle, which can class as the weekly. Okay, the cycle which is in the daily, and the primary, the 12-hour, the intermediate for the 4-hour, etc., etc. We have you have the intermediate, minor, minute, sub minute. Okay, so it's important to that every overall Elliott wave has another Elliott wave within it. Okay, so you can still use this even on the 1 minute chart. You're doing 5 Elliott waves. When you zoom out, another 5 Elliott waves. Go to the 1 hour, and another set of Elliott waves, so on and so forth. Now, if you understand. With that said, that's kind of the introduction, covering covering the theory to the Elliot waves, and now we're gonna be covering the 5 impulse waves and how they work. Okay, so wave one. Okay, wave one. The stock or coin makes its initial move upwards. Okay, this is usually caused by a small number of people that all of a sudden feels that the price of the coin is cheap. So it's a perfect time to buy. This causes the rise. The stock or coin or the commodities. Okay, other. So let's go to the back to our okay, so in wave one we make our initial move upwards. Okay, we make our initial move upwards. Obviously, if this was a reverse pattern, then it's coming, the value is becoming too high and coming back down, right, like what you see right here. Okay, here we're gonna be covering the theory as if it's the trending upwards. Okay, the 5 waves upwards. Remember, this happens downwards as well. Okay, so the first initial move is the first wave. Okay, so, and wave two, and wave two. At this point, enough people who were in the original wave consider the coin overvalued and take profits. Okay, so you see here we got a wave move one. Okay, wave one up here, and this is where people that bought down here starts taking profits. Okay, always people take profits in any trading. It's a necessity. So people take their profits, but you will never see the wave number two. Okay, going down below where it started. Okay, uh, normally you can expect a halfway retracement. Okay, you can expect a halfway. Oops, you can expect a halfway retracement. Okay, maybe 50%. Okay, but normally this will not go below the start of the wave. Okay, normally you would expect a halfway retracement, and that's when other people that didn't get the button, okay, that didn't get the bottom, saw that shoot up in price and thinking, oh, I want to get in on this. So it's normal, you get a 50% retracement, and this is where you use the Fibonacci tool to try and get our price point in. Okay, but yeah, the Fibonacci tool is made for another video. So once the wave 2 made its way down, this is when you get the third wave. Okay, this third wave. Okay, the wave 3, let's see, wave 3, this is usually the longest and strongest wave. The coin has got the attention of the mass public. So you get your initial move up, people take their profits and move down, and when it starts to consolidate, it starts to move back up. So people seeing that this one is being broken. Okay, this resistance is being broken right here, and it's starting to make a strong impulse wave, creating the wave 3. Okay, this is where you get a lot of people buying in. Okay, and this is where normally the biggest wave caused this, this is where it's gaining a lot of attention. Okay, so it's all to do with psychology. So yeah, that's the wave 3, normally the biggest for that reason, why the wave 3 is very strong and sharpest one. Okay, so more people find out about the coin and want to buy in. This causes the price go higher and higher. So when we look at the wave 4, obviously the wave 4 is traders taking profits again. Okay, so you got a very big move upwards. Let's say 150% move to the upside. Okay, for an example. Okay, and the coin is considered very, very expensive again, and people thinking, oh, I don't want to buy in that high. This is very expensive. Again, people taking profits, and with that, with the supply and demand, obviously the supply and demand is a very big thing. A lot of people are taking profits, and a lot are waiting to buy, not wanting to buy after such a big move. Okay, um this wave tends to be weak because there are usually more people that are still bullish on the coin and are waiting to buy the dips. Okay, so after the after 150% move upwards, when the move starts to move down, okay, let's say 30%, okay, let's say 30%, and there are people already waiting for their coins. They took profits at the top, while other traders are waiting to buy the dip. Okay, buy the dip is when the coin goes down in price and they are ready and waiting for their orders, and then that obviously causes the start of the wave 5. Wave 5, this is the traders and investors start coming up with ridiculous reasons to buy the coin and try to ridicule you when you start to disagree with them. Okay, you get this impulse waves up. Okay, you get this all the time on social media like Twitter, and it's just crazy where where people will really try to shield you so hard, and it will give you like ludicrous reasons to buy the coin, and they will really argue and put up arguments. So if you try and disagree with them on this coin, it's crazy. You see this all the time, especially on Twitter. Okay, buy the high. It's crazy. So that's when the coin becomes overpriced. So contrarians start to short the coin and starting the corrective pattern, which is the ABC. Okay, so the top of wave 5, you start getting all these pillars really pushing this coin in your face, and this is when the coin is overpriced. Okay, when everybody's eyes are on the coin, okay, when everybody's fearful, so that's when you buy. Okay, so when the coin's very low, you buy. Okay, when everybody's talking about the coin and it's everywhere, that's a good time to sell. Okay, it's just how the market works. That's the best time to short, when you see people's grandparents asking about the coin and wanting to buy in, for example. So that brings us to the three rules, three major rules that are always followed on Elliot waves. So these three rules cannot be broken, and if they are broken, then that means you have incorrectly counted your waves and you must do a recount. Okay, so rule number 1, this is very important, so make a note. Okay, so make a note for yourself because it's very important. Wave 3 can never be the shortest impulse wave. Okay, so let's say the wave 3 is like this. Okay, wave 3 is like this, and you have this. Okay, this is not a valid count. Okay, you have to where wave 3 is majority of the time the biggest wave and can never be the shortest wave. Okay, wave, so that's basically invalid. That's an invalid count. Okay. Okay, rule number 2. But wave 2 can never go beyond the start of wave 1. Okay, so as I showed you earlier, here wave 2 can never go beyond the start of wave 1, so this will not be a valid count, and you would have to recount, or you are into a correction. Okay, you have to recount or redo your count. Okay, etc, etc. So that's the rule number 2. Okay, so rule number 3, wave 4 can never cross in the same price area as wave 1. Okay, so wave 4, okay, let's say wave 4. Okay, wave 4 can never usually go below this below this line. Okay, can never go below this line. Okay, so for cryptocurrency, okay, I allow a wick at most. Okay, this is because we are in a highly leveraged market. There's people playing with 100x 100 times leverage. Okay, it's just really crazy, very volatile market. You're not going to get this on stocks, okay, especially on big stocks, whereas in cryptocurrency is renowned for its volatility. So that's why I allow a wick, but I wouldn't allow a close of the candle. Okay, so that's basically saying wave 4 can never cross wave 1 like this. Okay, it should bounce and use this as support, okay, if wave 4 goes down, to here, for example, and closes the candle down here, this is not a valid count. Okay, you would have to redo your count. Okay, so wave 4 must hold the wave 1 territory. Okay, I hope this makes sense, but that's why it's a very good idea to be playing your buys around this support. Okay, so it works out, really works out so well. Okay, so so that's the three major rules. Okay, that one must abide. Okay, by it. These three rules are like bread and butter for Elliott waves, so they must be met. Okay, so here are some these are some guidelines that can be broken, but I find they work very well. So these rules can never be broken. Um, but the majority of the time I find them working and really work as a trader. Okay. Um, sometimes wave 5 does not move beyond the end of wave 3. Okay, this is called the truncation. So let's get this out of the way. Okay, sometimes wave 5 cannot go beyond wave 3. Okay, this is wave 3. Okay, wave 5 can move like this. Okay, where wave 5 does not go beyond the end of wave 3, and this is called a truncation. Okay, this is called a truncation. So it's normal to see a wave 5 like this, where we get the 1 2 3 4 and the 5 ending on par with wave 3, and then you could have what is now known as a double top resistance. Okay, double top resistance, where wave 3 and 5 created the double top, and then you get your ABC corrections. A 3-5 top like this creates heavy resistance. Okay, and you would see quite a bearish correction after a double top like that, and that's how you get the double top from the 3-5 impulse wave. So that wave 5 is not going any higher. Okay, so yeah, that's called the truncation. Okay, so waves 3 wave 3 tends to be very long and sharp and extended. Okay, this is because of everybody buying in, and it's so normal to see the third Elliott wave going to be very extended. Okay, very extended like this. Okay, and that you can get your retracement and move on to, you have your wave 4 and move on to wave 5. Okay, but wave 3 is normally the sharpest rise. Okay, very quick impulse wave up. Okay, so waves 2 and 4 frequently bounce at the Fibonacci retracement levels. Always keep an eye on the 0.618 or the golden ratio level. Okay, I would take my Fibonacci from the start of the bottom. Okay, right here, and target the 0.618 or this Fibonacci levels. Okay, but most of the time I target the 50%. Okay, and trying to buying on a nice Fibonacci retracement level, but I'm gonna be covering this on another lesson. And finally, you use Fibonacci extensions to find a nice price target for waves 3 and 5, normally between 1 and 2.618 Fibonacci. Okay, so the standard will be I will use the Fibonacci extension. Okay, like this. Okay, and I would be targeting the 1. Okay, and then we have the corrective wave and the fifth impulse wave. Okay, or maybe, or like this, maybe like this. Okay, you you can in using this, and from where you can get your price target for wave 3 and wave 5, you will hope to see your target being met like that. Okay, so basically that covers our theory on the Elliott waves. Okay, their theory. The lesson was much of an introduction, so you can understand Elliott waves. So next lesson, I will be going to detail on about the corrective waves. Okay, this one. Uh, so you understand I will be going into detail, so you understand the theory behind the corrections. And finally, the last lesson that I will be going to show you is basically we're gonna be looking at charts. Okay, let's put the theory into practice so we can get used to it. Okay. Ladies and gentlemen, I hope you learned very well in this Elliot wave video lesson. So I hope I didn't bore you. I realize that I've been speaking a lot of time here, so I hope this lesson helps you become a trader. So put this theory into practice and help you in your trading. Okay, so ladies and gentlemen, I hope you enjoy very well, and smash the likes and push the subscribe button if you're new to the channel. So if you want more lessons, okay, smash the likes. Okay, let's get the likes. And I'm gonna wrap this up right now, and I'll see you in the next video. Cheers.